beautiful traders. Today I'm going to teach you about how to approach the market using price action, pure price action. So we are going to use the breakout strategy. So for you to start to trade, you have to know some of the basics of how the market moves. So here I'm going to show you different types of trends we have. First of all, we have the trend that we have this type of trend, which is called the downtrend. So downtrend, it consists of higher lows and lower lows. So the market will move from an upward position going downwards, then comes back to retest, break last lower low, then makes another lower low, then comes to make a lower high, higher low, then it comes back to break the last lower low. So here, this is what we call our downtrend. The market will move from this position. The market will come and make lower lows like this. Let me use this set of arrows. So the market will move like this, then comes back, then it comes back, makes another point. Sorry for using a different arrow, trend line. So I'm going to use this arrow. So this is how the market let me so this one is just keeps on moving. I wanted to show you that's how the market is moving. So here the market moves from this point, comes back, moves, make another lower low, then moves and make this lower low. So this is our trend. This is our trend. This is our trend. This is our downtrend. Then we have an uptrend. The uptrend, we have an uptrend consists of consists of lower highs and higher highs. That's what the uptrend consists of. So in uptrend, we have the market moving from this area, from a lower point going to a higher point, then comes back to retest, moves to break the previous higher high to make another higher high, which is higher than this high. It made from this area, it moved to make this area, which is our higher high. Then here it has broken this area. So this area is what we call our higher high. This area here is what we call our lower low. So it will break those areas to make our trend, our uptrend. So guys, we got another trend which is called a ranging market. The market will just move sideways. It won't go break any point. You just move in the same direction like this. It will keep on making these areas. So coming to this point, coming back, then it will make these areas. So when you want to approach the market, we come from a higher time frame like weekly, monthly, and daily time frame. Those are the time frames that I recommend you to use so that you can be able to approach the market going down. Then you make your entries at 15 minutes time frame to 5 minutes time frame, even 1 minute time frame. So here, let me move to a weekly time frame. So here in the weekly time frame, this is what we have. So we are going to draw our lines, our trend lines like this. Let me move this. This is our trend line. We joined these points. So here we are going to join this point here. Then since we are going it looks like an uptrend. So this is our uptrend. The market is trending upwards. So this is how the market is moving. We draw this line here. Now we have a clue about where the market is heading to. Then you come back to lower time frames like daily. You move to daily time frame. So in daily time frame, you can see that we have this area here. We have this area here. So we are going to join these points. We talked about how the market moves. So we talked about uptrend. So if you can realize, the market is moving, is going up. So here you can see it moved from this point to this point, moved here, went there, come back, moved again. So This is how the uptrend is, how we see the uptrend. So we are sure that the market is moving upwards. So from here we have this area. We are going to mark these highs. We are going to mark these highs, then again we go to lower time frames to see what is really happening. From there we go to, let's go to H1. This is our H1 time frame. You can see the market keeps on coming to this point, to our trend line. So it moved, you can see here, this is where the market keeps on coming to our trend line. So this is how we see the market doing. This is our trend line, came back to hit our trend line, then it went up. So we are going back to our this is our H. Let's go to 30 minutes time frame. So the market, or on the 30 minutes time frame, is still moving up. We are having an uptrend like this. It moved, then come back, it went there. This is our uptrend. So how are we going to approach our market? We want to use the breakout strategy. That is our main purpose. Each and every time you have to draw your trend line to show where the trend is going. So here, this is the lower high. We connect to this lower high. We connect all the lower highs. So whenever the price come back to break this area, that's when we start making our entries. That's when we start making our entries. Each and every time price breaks below our trend line. So let's backtest to see what happened in the past. So we had this area here. The price moved from this lower low. It moved like this. Each and every time the price breaks, this is how the market moved. You can see whenever the price breaks this area, the lower trend, the price starts going down. You can see here the price broke out here, then we see our price started going down. This is how the price has been moving. So this is how we trade the breakout strategy. This is how we trade the breakout strategy. we have this area here. The price was moving was in an uptrend. Then we saw the price coming back to break this area. Then the price started moving down. So where should we take our profits and where should we set our stop loss? For this area, we can, for the trade like this one, when we want to trade here, this area, where should we put our stop loss and take profits? So here we put our stop loss. We come here and put our stop loss just above this higher high, and we put our take profit here. We shouldn't be greedy in this market because anything can happen. Let's say you were targeting this lower point here, as your stop loss, as your take profit. You see the market will just move up before coming to hit your TP. It will just, maybe it will go and never come back to, and then it will hit your stop loss. Let's say your stop loss was here. Then you see the market has moved and never came to hit your take profit, but it came here and hit your stop loss. So we shouldn't be greedy. This setup, we broke here. Where is our TP? Our TP should be here. Our TP should be in line with this area. Then we scalp for that's how we trade and collect our profits. So here you see, in this scenario, we have this, the market is trending like this to the downside. What should we do? The market is trending to the downside. So in scenarios like this, the market has broke down here. Here, where do we put our stop loss? Our stop loss should be here on the previous higher low. Then our TP should be here. This is our first take profit. You can just do that by trailing your stop loss. Every time the market moves a few pips, you just come there. After breaking this point, you come and place your stop loss. You drag your stop loss and you trail it to the next break even. Like from here, you just put your stop loss above this higher low. Let's see another entry where you should have made an entry. So we have this area here. The market was still trending down, and then you connect your higher lows like this. Then you come here, you see the market was trending down. Each and every moment it breaks out, it gives us an entry. Then you trade and look on your left hand side to see where you are going to make your TP. Maybe you can target this area where the market showed turning back. That's where you can see you could have hit your TP. That is how we trade breakout strategy. Let's check. That was volatility 101s. So you can just go check another index. Can check even volatility 100. Let's go to a higher time frame like weekly time frame. So this is our weekly time frame. We can see here we have to check where the market is first of all. So this is our volatility 100. We keep on connecting the higher. We keep on connecting the points, our turning points, where we saw the market making U-turns. This is where we can connect our points here. There's another point. So we go to a lower time frame, which is daily, to see what is really happening. The market is trending down. So what is happening here? You come like this, you connect our points here, then you connect this point here. When the price breaks to the lower side, we continue with ourselves. When we break to the upper side, we continue with our buys. So this is how the market is moving. We can see that you are trading between these points. So we're going to lower time frames like 15 minutes time frame. What is really happening there? We have these points. We just connect them. When the market breaks our point, we start buying. So, and then we put our stop loss below. We put our stop loss below here. So you can see that when we could have entered this trade, we could be in losses right now, but the stop loss wasn't hit. Then we have something happening here. this is what is happening. So the market is preparing itself to go to the upper side. So when the market breaks above this trend line, that's when we start buy. Then we set our stop loss here below this point. Then where is our TP? Our TP should be at this point. We shouldn't be greedy at this point, and we will end up coming to maybe this point. This is our second TP. I think we have come to the end of our session. Switch on. For you to be able to see videos like this, you should subscribe for this channel and continue liking our videos, so that we can make more content for you that will be that will make you a profitable trader. Thank you for watching.